Thanks for tuning in once again to the Silver Bullet Report. I'm Greg DePalma and Steve Faraci joining me, of course, as we talk about a whole variety of things that we love to talk about, not just the economy, but anything else that we can do to educate you and, more importantly, educate me on everything that's going on in the world, including the fact that we're at a time right now, Steve, where, and we talked about this on the last episode, where the economy does seem to be heading into a good direction. And I think the average person like me is pretty happy about that. Um, but as we talked about on the last show, how happy should we be? You know, is it a false uh, headline?
Well, yes and no. It's not a false headline because, as we discussed before hyperinflationary or just inflationary period starts, you go into this period of time where money velocity kicks in, and they call it money illusion, according to Jim Rickards. So it is accurate that does happen, and the economy does actually pick up and seem to pick up back up again. But it's only temporary. You always see this before the party really starts. So yes, it's a real headline, but it's a little misleading given the climate that we're in. With the dollar, the money printing, and so forth and so on. So that's a kind of a double-headed question here.
Is there and we didn't really talk about this on the last show, but okay, I'm the average person. It's nice to know that I shouldn't just believe everything I read. Are there warning signs? Are there little things that I could pick up that go, oh, this is maybe the beginning of the economy maybe heading in the wrong direction?
Right. So just understand, I mean, we've seen this so many times throughout the ages, especially back in 2008. They do what's called management perception, right? So it's not that they're lying about certain things, but when they present them in a certain way that gives you perhaps a false idea of what's really going on. Do you follow me?
Sure.
So, I mean, if you look at some of the stats that kind of broke this week, you got the bankruptcy numbers came in, and it was 40% up, 40% month on month, which is a startling statistic. We're not talking about an aggregate year number here. We're talking about month on month. So in 1 month, they were up 40%. New jobless claims remain in the 700,000 to 800,000 per week, almost 1 million a week.
Okay.
Remains in that buffer zone there. And the inflation number came in, and it was double what they expected. We all knew that, right? We go to the grocery store, we see price inflation, especially, has definitely gone up, and they kept telling us, the Fed's talking about how we're trying to get more inflation. That's nonsense. Inflation's definitely been ramping up. You look at the lumber prices for guys that are builders. I mean, everywhere you look, inflation was ramping up, right? So, sure enough, finally the statistic has kind of recognized that by coming in double what they had expected it to come in as. And typically, that's an important thing because as inflation rates rise, they want to raise the interest rates to compensate for that a little bit, right?
Okay.
To keep the economy under control. So we'll watch that as the months start to click away here, because that's an important balance right there. Those two things right there. So we know the Fed can't really do that. It's funny. The Fed was on Powell was on this week talking about that very thing, and he was asked the question. As we see inflation start to rise, they acknowledge that. Are you going to raise interest rates? He goes, well, that's the tool we have in our tool belt to handle that. But he was acting really funny. Like he was nervous. He kept looking down. It wasn't something he really wanted to address fully, because raising rates would not allow us to service that huge debt we have, right?
Okay.
It affects that. So our debt's so big now that they've kind of painted themselves into a corner. And again, they're deleting and manipulating a lot of statistics, right? So I think me and you had a conversation just recently about them eliminating the M1 and M2, the money supply statistics. We're not allowed to see those anymore.
All right, and talk about what is the money supply? What are those statistics for the average person like me who has never even heard of that before?
Yeah, well, there's actually there's three of them, M1, M2, and M3. But just in a general sense, it's so you can keep an eye on. I mean, the printing of money debases the currency, right? The more money you print, the less each one is worth in effect, right?
Yes.
So again, it's a very you couple that with other statistics, and you can paint a picture of where this economy is going. They obviously don't want us to paint that picture. They don't even want us to have a brush. So they're taking the brush away by eliminating statistics that we can use to gauge the near and medium term direction of our economy, right?
Okay.
So we don't know how much. I mean, we know they printed 30 to 40% of all dollars ever printed was printed in the last 12 months. We know that, right? So, and they let the statistics up at that point. So to eliminate them now, that means they're going nuclear to me. Why would you eliminate that statistic that's been around, I think since the 70s is when they came out with it. All of a sudden, after the biggest year of printing, you allowed everyone to see. Why would you now eliminate it? Because we're heading into a very dangerous zone here. We're, heading up to $30 trillion in debt. And like I said, if interest rates have to go up, that we are not going to be able to service that debt properly at 30 trillion plus. Yeah. So they're going to start hiding statistics. They've been playing with the inflation rates, and I'll tell you why. Like for me, I use real rates to gauge the gold price because they have a perfect inverse correlation. If you look at the chart, it's a mirror image. It's an inverse correlation. So I use those real rates to kind of, gauge where gold's going, right? So what are real rates? Real rates are nominal interest rates minus inflation rates, okay? So if you have the correct inflation rate, which is a lot higher, that gives you negative interest rates, right?
Okay.
Because you're deducting that from the regular interest rate. And that gives you the real rate. So that becomes negative. Now, if you have negative interest rates, that means gold should be a lot higher if that inverse correlation holds true, right? Okay. So there's one reason why they're playing with the inflation rates, right? Because they have to keep, I'll call it the illusion alive, by kind of padding these stats as much as they can for as long as they can. But it looks like the gig might finally be up. We'll see. Like I said, this is a very important month. A lot of people have had their eye on April, especially the end of April. Like in the metals markets, a lot of contracts stand for delivery, which would be a problem on the COMEX because it looks like we're having a metals shortage as it is, right? And that would also affect the price. So a lot of things going on. This month is going to be interesting. I think this month and next month will start to tell a different picture. That's my belief. And we'll just have to see how it plays out.
And so when the government hides the money supply, is that the job of the media to point that out? Because obviously if the average person is not going to know that this is taking place unless the media makes a story of it. And if the media doesn't make a story of it, then 90% of the population who doesn't follow this information just goes by their lives and it doesn't affect them, or they don't believe it affects them. So that's the disappointing thing, isn't it? Is that that's what you need the media for. That's what I always thought. When I got into, even though it was sports, I got into sports media because I always felt that, all right, if I can't be in the business of sports, I felt that at least what I could do is be a voice for the sports fan and try to explain to them that not everything you're reading in the paper or hearing on television is accurate, just like you're talking about with what we hear on the news or read in the newspaper or online. So that's a disappointment for me because you would hope and think that there are enough people in the media that would see the story and say, hey, wait a second, this is something that needs to be reported, but yet it's not.
Well, yeah, you're under the assumption that that's the job of the mainstream media is to see things and report them accurately. Yeah. And I'm here to tell you that's not the case. Yeah. I think we've had that conversation before as well. No, clearly they will not ever, as this thing progresses, the statistics will not be reported by the mainstream media. You're going to have to dig for it yourself. That's what we talked about. Get some education on the subject yourself. Understand it, know where to get the statistics, and keep an eye on it. They're not going to send you an email saying, "Hey guys, look out!" They just hid the M1 and M2 money supply, so you won't be able to see it. Yeah. Not going to happen.
And I don't even think, to me, I don't even think it's a political thing for the media. And to tell you the truth, I'm not even sure some of the media is even smart enough. I'll be honest with you. I just don't think they are. I think there definitely are a fraction of the members of the media that understand and follow the things that we talk about here, and that you are, you know, you are an expert of, and you have followed this for many years. But just kind of knowing the media the way that I do, I'm not even sure a lot of these guys even know what to look for themselves, or care to what to look for. Maybe that's what it is. I'm not even going to investigate because it's not something I really want to investigate. So I just thought it was a point for me to bring up, that I just so everybody understands. I don't think it's a political thing that we're slamming the media. I think whether you have a Republican in the White House or a Democrat in the White House, I still don't think this is a story.
No, it has nothing to do with politics. It's clearly the mainstream media doesn't investigate anything anymore. They're given a script. And, yes, sometimes that happens in politics. We're apolitical. We don't even want to discuss that. But no, this isn't a political thing. This is, and I'll be honest with you, Greg, like, their job is to get ratings, right? Like 90+5%, whatever, of all Americans couldn't care less about the M2 money supply number.
Sure.
So even if they wanted to report on it, it wouldn't, people would tune out, right?
Yeah.
So
I can see them sitting in the boardroom going over, okay, here are the main stories of the day. What are we going to talk about? And someone goes, well, I want to talk about how they're hiding the money supply. Mm-hmm. Nobody cares. Next.
Unfortunately. Yeah. It's unfortunate, but true, they should care. I mean, they should care a lot because it's going to affect their lives here sooner or later. But, the reality is they don't, right? They care about what shoes Kim Kardashian wore at the Emmys or whatever that award show she attends, stuff like that. So they care about who's doing better on Dancing with the Stars. That's the important thing for most people. So, and that's okay if that's the life you want to lead. I'm just saying, don't expect the media to sum it all up to put this information in your lap.
Like you said, you got to do your own work. That
100%. Yep. It's your responsibility.
And along the same lines, and by the way, our main topic this week, we're going to get into gold and silver, precious metals market, and that's something we're going to talk a lot more of. And it's something that we should anyway. I mean, the channel is named after a precious metal. But before we get to that, I also wanted to ask you, since we're into this, the economy topic this week is also the hedge fund, the boom of the hedge fund. Can you elaborate a little bit more on that? Because we talked about that about a couple hours ago when we were talking about some of the topics that we were thinking about discussing on the show.
Yeah, by boom, you mean implosion. Yeah, we've got a strange string of hedge funds blowing up here lately. We had the Melvin Capital during the GameStop thing. And Maple Lane was another one that not many people talked about that also imploded during that same period of time. And now last week we have Archegos Capital, right? So there's some big hedge funds that are blowing up. Things are going wrong. Now, this is all tied to the derivatives market, which is a very, I call them financial weapons of mass destruction, right? Okay. So we don't want to get, we're a show for people just learning about this stuff. So we don't want to get too involved in when my brother comes on, if he comes on, he'll explain, he dealt in derivatives. So he'll explain more about that. Hopefully as easily as you can. But we're going to find out, just to give you a little overview. JP Morgan has trillions and trillions of dollars worth of derivatives exposure. So how they made it through all this, those little guys blowing up without some sort of issues is interesting as well. That's a story. That's a whole show we can talk about. But you're right. We should mention it here. Hedge funds are starting to have problems. The derivatives market might be under a little bit of pressure here, which we won't get into today, but it's very important. When that market goes, when that market implodes, that should be maybe the big one. The big one.
Yeah, we don't want to. Yeah, let's hold off on that, please.
But signs that might be starting to happen is important. Glad you brought that up.
All right, now let's talk about gold and silver, because again, as I mentioned, this is something that we want to really dive into at least heavily once a month, kind of get a little bit of an update on what's going on.
Yeah, so actually, it was a good week for the metals. Good week to talk about the metals. So the big question is, we're coming out of hopefully a consolidation stage here, right? So the big question is, has gold and silver bottomed, right? Because they're showing signs. Just last week, they're showing signs of bottoming. In silver, it had gone down below the 200-day moving average, which is not a good sign, very bearish, which concerned a lot of people. But it has since, last week, it popped back up above, considerably above. I mean, it was a decent move. And if we can just get confirmation this week that it's going to stay above that 200-day moving average, that's a bullish sign. That usually means that, when you look back in charts, a lot of times you'll see that the dip below the 200-day moving average, once it penetrates back above and stays above and it confirms, very good sign. It usually takes a nice little run after that. So looks like that's what's starting to happen. In gold, to confirm, gold and silver run in tandem. So, what you see happening in one, you should see happening in the other. And if you do, that's a good sign. So in gold at that same time period, we had what's called a W pattern, right, which is super bullish. You don't see it very often, but I think some people call it a double bottom. We had that at around, I want to say 1680, 1690. We had a double bottom there, forming a W pattern. So that also is very bullish, along with what I just told you about silver. So, things are looking good for gold and silver. We have a little bit of work to do. We just got to confirm those new patterns, that new direction, and we should be off to the races. Now, months ago, I spoke to you about a chart I really liked, right? And I'm hoping this is confirming this long-term chart. What I really like to see is longer-term confirmation. There's a lot of white noise that happens in the short-term charts, and that's what fools a lot of people, gets them really upset. But I felt confident through this whole consolidation that this was just that, consolidation.
There you go.
So I felt strongly this was just a consolidation. So the chart that led me to believe that was one that goes all the way back to the 1980 high. It's a 40-year confirmation chart. So I like longer-term charts with many points of contention, right? So I don't know if you're able to pull this up on the screen, but while I'm talking, and I'm doing, I can't give you exact numbers because I'm doing this off the top of my head, but we saw in early 2008, we saw gold break the 1980 high.
Okay. I see that.
And then it pulled back for about 8 or 9 months into consolidation. It was, at the time, it felt like a super long consolidation, right? Similar to what's happening right now.
Okay.
And then what happened after that consolidation is, and then gold always does this. Once it breaches the previous all-time high, it pulls back and then has a much stronger second leg, which led up to the 2011 top.
Okay.
Right?
Yeah.
So fast forward to, I don't know if you have a shorter term chart that perhaps you could put up, but if you fast forward to just this chunk of time, 2008 to say present,
or
maybe 2006, just to get a little background, we saw the same thing, right? So we saw that formation down out of the 2011 top. Now we just recently broke the 2011 top, just like we did in 2008. Yep. Now we're going into a long consolidation, just like we did for that 8 or 9 months in 2008.
Okay.
And now we should have that second stronger run up like we saw, right? From 2008 to 2011. We saw that nice, strong second leg up. So we have an identical pattern, which I never confirmed this, but Michael Oliver, who I like a lot, very, very sharp guy, says this happens every time gold goes on a bull run. He says even the previous ones. But if you just take that chart right there, they're almost identical. So if we are in fact confirming the beginning of that, the gold and silver bottom, and we're beginning that second leg up, just to mirror what happened back in 2008, that's a very good sign. So we like to see that. We like to look back in history and see that, okay, we have a reference point for this. It does, in fact, look like that's going to be the case. I didn't hear anyone talking about that chart, so I wanted to get on and go over that. So that should give people, a little bit of ease here over the whole thing to look at that chart and say, yeah, that's exactly what happened before. We expect it to happen again.
But how about the time period, though? Like if I'm looking at this most, the 07 to today chart, I see that it took about what? It looks like it took
It's
about 5 years to get down to like
well, that's it.
2016. It kind of dropped down again.
Totally insignificant.
Okay.
Yeah, it's just the fact that it broke the previous high. That's the important
That's the
thing.
important thing. Okay.
My view on why it took such a shorter period of time is because now we're in a more radical time period of money printing.
Okay.
In other words, things were more stable through that period of time, but there was really no way to hold the metals down that long this time, given the environment we're in. Right.
Okay.
This is the perfect environment, technically, for gold and silver to flourish in. Right. So the other thing I want to point out is that another bullish point. I mean, there's three good ones right there, but another bullish point is that when we see metals usually begin to break out, the miners always go first. And we just started to see last week. If you look at the downward trend channels for Newmont Mining and Wheaton, they both broke out of the downtrend channel to the upside. They pierced that upper line. So there's another bullish sign that the miners are going to lead us out of here, and the metals are, in fact, they have bottomed and ready to resume this second, more powerful leg.
Okay.
Like we've seen in the past. So there's a lot of confirmation there. Lastly, both gold and silver are in massive cup and handle formations. That's another bullish sign that we tend to look at. And a cup and handle just means you got the cup, and then it pulls back and makes a handle.
Okay.
Seeing that, you can probably see that on your gold chart right there.
Yeah, I'm looking here. I'm actually looking at the one from 73.
We're at the bottom of the handle right now.
Okay.
So there's and we're actually in a 40-year cup and handle. So both gold and silver have cup and handles. Again, two bullish signals. So everywhere you look, we're seeing bullish signals now that we finally started. And again, we have a little work to do. We don't have a total confirmation of this yet. But if in fact that these breakouts are the case, and they confirm everything else, we have all these bullish patterns to look at. All systems are go, and we're off to the races on that second leg. Should be interesting.
So, what do you look at now in the immediate future? What do you? And again, we're not a forecasting, investing channel, but let's say, is there anything in particular that you're expecting between now and the next time we talk about this next month?
Yeah, I mean, what I'm looking for now. Yeah, what I'm looking for now, I just told you, is confirmation. That's all I care about. I don't want to continue to speculate any further on the continued momentum up until I see confirmation, which should happen this week. I'd like to see 2 weekly closes, above the 200-day moving average, say for silver. I'd like to see a couple closes that confirm that this move is actually happening. Once I see that, which oddly enough will happen towards the end of April, which is this time period. Number one, we have an enormous amount of contracts standing for delivery on the COMEX in the metals, right? So that's important. Okay. And this is just a time period that a lot of guys that have been in this industry a long time seem to feel that at the end of April, some fireworks are going to happen. So we have a lot of convergence here. Should be interesting. The chart is now starting to front run that sentiment that the end of April could be really exciting for the metals, man. So
exciting, good.
I'm excited. Exciting in a good way. Yeah, very good. So we'll see what happens. And there's all the talk about as soon as we break the manipulation. I think I've told you all these markets are manipulated, but none more manipulated than the metals.
Yep.
Because they're kind of the metals hold account to the dollar, right? So when they try to hold the metals down because a strong metals price portends a weaker dollar, and they're trying to get people from seeing where we're at currently. But at some point, they feel that the manipulation will be broken, and we won't have to contend with that anymore. In which case, now look, silver is the only asset that is lower than its 1980 high. It's 50% lower than its 1980 high. It's half of what it was in 1980, which was $50. No other asset in the world isn't multiples higher of its 1980 high because we've printed so many dollars. It takes more of them, right, to buy these assets. So you can just see, I mean, come on, it's one of the most important metals for industry and everything. I mean, it's crazy that it's not, excuse me, several multiples higher than its 1980 high, like everything else is. So, I mean, it should be obvious to you if you just, use a little common sense.
All right, Steve. We'll talk to you next week.
Okay. Take care.